Hello everybody, I hope you are doing well. Welcome to the economy discussion video. In this video we are going to discuss about the topics under mobilization of resources. In fact, this is a continuation to the earlier video where we have dissected the topic of mobilization of resources into multiple subtopics which are important for mains point of view. Okay, we have already discussed certain mains questions on these topics, like one previous year question and also one practice question. So now we are going to discuss further subtopics, many more subtopics under the topic of mobilization of resources. The next topic is NaBFID, National Bank for Financing Infrastructure and Development. This topic is very important under mobilization of resources, and you can expect a question on this topic in this year. See, there has been not a question on this topic till now, and recently the government has planned to rise up to 70,000 crores in the financial year 26 for development push, especially the infrastructure push. Okay, this is one reason why this topic is important. And also NaBFID has been in talks with multiple multilateral banks like World Bank and Asian Development Bank to get the loans for infrastructure creation in Indian economy. Okay, so of course there are certain challenges for infrastructure financing in India. To overcome these challenges, government has come up with a separate dedicated financial institution known as NaBFID, National Bank for Financing Infrastructure and Development. See, this is a dedicated financial institution that is only for the sake of infrastructure development in Indian economy. See, these dedicated financial institutions are not something very, not strange to Indian economy. Since independence time, India had introduced multiple DFIs, multiple dedicated financial institutions. You might have heard about NABARD, National Bank for Agriculture and Rural Development. Its main purpose is to promote agriculture and rural development in Indian economy. Same thing goes with National Housing Bank. It is to give impetus to housing sector and make sure that the population could have access to affordable housing in India. And the same thing goes with Exim Bank. The bank's main motive is to provide export credit to Indian business firms. So each and every dedicated financial institution has a niche objective. So NaBFID is a new addition to this category of dedicated financial institutions. These are also known as All India Financial Institutions and are regulated under Reserve Bank of India. Okay. So what was the need for NaBFID? That, and what is its function and what are the significance? All these dimensions are going to be discussed under this question. Okay. Let's have a look at the question. Despite being critical driver of economic growth, India's infrastructure sector faces persistent financial challenges. Examine the role of National Bank for Financing Infrastructure and Development in addressing these challenges. So basically the question is demanding what was the need for NaBFID in the first place, and how is it going to overcome the challenges that are being faced by the infrastructure sector in India, and what are those challenges, how it is going to address these challenges. That means what is NaBFID, what is the need for NaBFID, what are its functions, and what is the significance of this NaBFID for infrastructure growth in Indian economy. That is basically the demand of the question. Okay, first and foremost we are going to address this part. Despite being critical driver of economic growth, India's infrastructure faces persistent financing challenges. See, infrastructure is important for every economy, because infrastructure or a strong infrastructure is going to improve the productivity of the economy. That means the cost of producing goods and services are going to be reduced. So with reducing cost of goods and services, the export demand is going to be improved, which means the Indian products are going to they're going to compete better with other products in the global market. So this will give impetus to our exports. And not only that, it also provide employment opportunities by pushing the aggregate demand in the economy. If you remember, we were discussing about the fiscal multiplier effect in the last class. Infrastructure spending has the highest fiscal multiplier effect in the economy. That means every rupee that is spent in the economy for infrastructure growth is going to have multiples of demand in the aggregate demand in the economy, thereby giving impetus to the GDP economic growth, GDP growth rate. So if India wants to achieve this goal of becoming a $5 trillion economy by 2030, we cannot turn a blind eye to this infrastructure sector as a whole. So infrastructure is that important. Infrastructure sector is such an important driver of economic growth. Despite that, infrastructure financing faces lot of challenges in Indian economy. So first of all, let's discuss about the challenges faced by the infrastructure financing sector. Infrastructure financing challenges, we'll discuss these challenges first, and then we'll get into the NaBFID and how NaBFID is going to overcome these challenges. Okay. See, why getting finances for infrastructure creation in Indian economy is such a big issue. The first and foremost challenge is due to the huge capital requirements for infrastructure creation. See, infrastructure projects are of big ticket projects. That means they require too much of capital. In fact, this capital cannot be met by the traditional banks and traditional financial institutions. Let's take the case of any bank like SBI. Scheduled bank, SBI State Bank of India is actually a universal bank. That means it provides loans to multiple kind of customers: agriculture loans, industrial loans, service sector loans, and also retail loans like credit card loans, loans given for consumer goods, and loans given for the purpose of education. All these things. Okay, so these are generally small ticket loans, but infrastructure loans are of big ticket. So the traditional financial institutions like banks, mutual funds, and NBFCs, they cannot meet the huge capital requirement needs that are required for the infrastructure projects. See, let's take the case of a highway project. Even to construct 1 kilometer of highway, it requires around 25 crores of money, 25 crores of rupees. That too without the cost of land. If you include the cost of land, it may lead to around, it may result in around 30 crores of cost, isn't it? So that is the such is the demand, such is the demand for capital in the infrastructure sector. So that is why in India the infrastructure financing requirements are largely unmet. Okay, that is one aspect. And second aspect is asset liability mismatch. You might have heard about this term, asset liability mismatch. This is one of the reasons why the infrastructure projects do not often receive lending from the banks. What is asset liability mismatch? Asset liability mismatch is a situation which is experienced by the banks at a time when their maturity of loans are not matched with the maturity of deposits. That means when banks provide loans to a particular customer, the maturity should be matched by the maturity of the deposits from which the money is being taken by the banks. That means if banks is actually raising the deposits, short term deposits of let's say 5 years, it cannot extend loans for 15 years because it takes 15 years to recover the loans that is given by the bank to a customer. But in the meanwhile, in the next 5 years, the bank has to give the money back to the depositor within the 5 years. So there is a conflict here. There is a conflict with the time period of maturity period of asset and liability. So these infrastructure projects are actually long term projects. It take around 10 years to complete a certain project and to become operational, to make it operational, and to generate revenues. It takes more than a decade for a project to be completely functional. In fact, a bank cannot wait for these long term loans, long term recovery, because it has to meet the short term demands of the deposits. That is why most of the banks cannot, the traditional banks, they cannot meet the infrastructure financing needs. They cannot give loans to the infrastructure projects because of this asset liability mismatch. If any bank would want to provide loan to an infrastructure project, it has to make sure that the entire loan should be sourced from long term deposits. That means the bank has to attract long term deposits. But the problem is, the if a bank has to attract long term deposits, it has to pay high amount of interest rate. Generally, the interest rate that is given to a long term deposit is much higher than the short term deposit in a bank. So the cost of funding for the bank is going to be increased. If the cost of funding is going to be increased, it has to offer the infrastructure loans at a very high cost. So this high cost of funding, these are the two reasons. Asset liability mismatch is one of the reasons, and also high cost of funding is another reason why most of the infrastructure projects do not receive banking loans so easily. Okay, next, the other reason is the risks associated with an infrastructure project. See, infrastructure projects are actually long-term projects. These long-term projects involve multiple risks. Okay, due to these risks, generally the traditional financial institutions like banks, NBFCs do not want to associate with these kind of risky projects. That is why they don't provide loans to them. So the risks associated with the infrastructure projects. So you might be wondering, what are the risks? I mean, what are the risks associated with these infrastructure projects? There are multiple risks. They are categorized into multiple types, like operational risks. Operational risks. What are operational risks? See, in order to start a mega infrastructure projects, the first and foremost prerequisite is to source the land, acquire the land. But in India, land acquisition is not just a costly exercise, but also a very cumbersome exercise. It has to take multiple approvals. It has to procure land from multiple landowners, and they have to pay compensation. They have to make sure that they are rehabilitated and resettled properly. And if at all there is any problem with this land acquisition, they have to conduct social impact assessment, environmental impact assessment. They have to take all kinds of safeguards. So it is going to take a lot of time. And also there are other clearances that are supposed to be taken from the government, like environmental clearances. If it involves clearing of any forest, it has to take the permission from Minister of Environment and Forest, and it has to take multiple levels of clearances from central government and state government. So there are multiple regulatory clearances that it has to seek from the government. So it may sometimes result in delay of the project. Delay of the project is actually an operational risk. Let's say everything is going well, but let's say there is some problem with the designing failure. There is some problem with the designing of the project. There is some flaw in the design. Then they have to start everything from the scratch. It may include cost escalation and also time delay of the infrastructure project. So there are a lot of such operational risks involved in it. However, apart from operational risk, there are other risks like legal risks. What are legal risks involved in implementation of an infrastructure project? See, generally infrastructure project involves coordination from multiple parties. Sometimes private sector and public sector come together in a joint venture to to initiate an infrastructure project. Often this requires great level of coordination, but often they come across certain amount of disputes, contractual disputes. These contractual disputes will land in courts. Then court will impose a stay on the implementation of the project, isn't it? That is a legal risk. Let's say if there is any public private partnership project, if there is any corruption angle that has been surfaced, then immediately somebody is going to file a PIL in the court. Then the court is going to impose a stay on the implementation of the project. This is not only improve the cost of the project, but also time delay of the project. So especially in the backdrop of these many legal risks, why would anybody would want to associate with that project? Especially giving loan to that project is a very high risky thing, right? So that is one of the reasons, legal risk. And also market risk. Market risk. What is market risk? Let's say the infrastructure project has been completed. Despite all the hurdles it has completed. Then it has to be operated and it has to be profitable also. Completing the project is only half the battle won. The rest of the battle is to raise the revenues to meet the infrastructure cost. Let's say there is a highway project, and that highway project, the private player, the infrastructure company thought that in 1 year it can actually generate a revenue of 1,000 crores. But unfortunately, due to the lack of demand in that particular route, there are hardly any commuters, And what if it fails to generate that revenue? It will impact its profits, it will impact its balance sheet. Then it will not be able to pay back the loans that it has taken from the banks. So there is also a market risk. So all these are the risks. So you might be wondering, all these risks are actually misplaced, all these fears are misplaced. No, in fact, in the first century, first 10 years of the 2000s, in the 2000 to 2012, banks have given lot of loans to the infrastructure projects, and all these infrastructure projects, most of the public private partnership projects have actually failed in delivering the project in time, and they failed in generating the revenues. And this has resulted in the default of the loans taken by the banks from taken by these infrastructure companies from public sector banks. Failure of the infrastructure projects is one of the reasons for the accumulation of NPS in the public sector banks in India. So these are the reasons why this may lead to what? This may lead to time and cost overrun. That means if a project is supposed to be completed in a decade, let's 10 years, it may take 5 more years to complete it. Cost overrun, that means if the project is supposed to be completed in 20,000 crores, but it may take 5 more thousands of crores. So this may result in defaulting of the loans. So there is a default risk with respect to the infrastructure projects. That is why nobody, no bank, no NBFC would dare to give loans to the infrastructure projects. This is one of the biggest challenge for infrastructure financing in Indian economy, right? Apart from that, there is another reason why the private companies do not want to invest in the infrastructure sector. See, generally government alone cannot provide infrastructure. We have to depend upon the private investments. Without private investment, we cannot create the robust infrastructure in India. But why private companies are, shying away from investing in infrastructure? One reason is actually the government intervention in price determination. That means whenever a project is constructed by a private party, it should have been given with freedom to choose the price. But unfortunately, the government would often intervenes in the price controls. This will actually deter or hinder the active participation of the active participation of private participation in private players in the infrastructure sector. See, you might be wondering that, why should government intervene in the pricing of the services? This is because of the nature of the infrastructure projects. This is very interesting. See, infrastructure projects are generally tend to show a monopoly in the economy. That means they are naturally monopolized. For example, let's take the case of a highway project. There is a highway constructed between two cities. That means that highway is actually connecting between two cities. And a private player is actually operating that highway, and that private player is collecting the toll of, let's say, 100 rupees per commuter. 100 rupees of toll per commuter. And I'm the commuter and I don't like the charges. Do I have a choice? No, I don't have the choice. I cannot choose between different lanes or different highways to go to the particular city. There is only one highway and I have to go through that highway. For example, if I have to purchase a product in the economy, let's say I want to purchase a mobile phone, and if I don't like the price, then I go to another mobile phone manufactured by another company which is offering for a cheaper price. That means whenever you want to purchase a good or service in the economy, there is a competition. But whenever you want to take the service of an infrastructure, you don't have a competition. So there is natural monopoly offered by the infrastructure projects. Due to this natural monopoly, there is a chance of being abused by the private player if they are going to control these infrastructure projects. So to prevent this abuse of natural monopoly, government would want to intervene in the pricing of these services from time to time. But private players do not like this, heavy intervention of the government in terms of price determination. So this is also one of the reasons government intervention in price controls is a very important reasons for poor infrastructure financing in India. That means it is going to deter private participation in the infrastructure investment. Okay. And not only that, you might be wondering, why should these infrastructure companies should depend on should depend upon these banks or financial intermediaries? Why can't they raise the money directly from the capital markets? Let's say there are multiple infrastructure companies like L&T is there, DLF is there. These companies can directly mobilize the resources by issuing the bonds themselves. The bonds can be purchased by investors like you and me, or the bonds can be purchased by any mutual fund. The bonds can be purchased by any retail investor or institutional investors. Then why are they not doing it? Why are they depending upon financial institutions like banks, NBFCs, and other financial institutions? Why can't they directly raise it from the capital markets? The problem is most of the bonds issued by the corporate companies are, they do not have any takers in the market. The problem is this narrow corporate bond market in India. That means narrow corporate bond market in India. That means there are no takers for the bond issued by the corporate companies in India. There are multiple reasons. One of the significant reasons is that Indian bond market is predominantly occupied by government securities. Everybody would want to purchase a government security, but they don't want to purchase a corporate bond security, corporate bonds. Why do you want to purchase a government security? Why do you prefer government security over a corporate bond? Because government securities are risk free. That is why banks do readily invest in the government securities. There are multiple reasons why banks want to purchase government securities, because they have to maintain statutory liquid ratio, so they would want to maintain it in the form of government securities. And also they require government securities for undertaking liquid adjustment facilities with the banks. So for open market operations, even RBI purchase the government securities. So there is a captive market for government securities. And even retail investors are also, they're purchasing government securities because they're gilt-edged securities. That means there is no risk associated with it. But nobody is trusting the government bonds, corporate bonds. The reason is actually the credit rating of these corporate bonds is very poor, very low. As long as the credit rating is high, they cannot, there will not be any demand in the market for your bond. And also if the credit rating is very low for an infrastructure company, it has to offer high interest rate for the bond that is issued by the company, and that is why there are no takers. So that is why they don't really enjoy taking, explore this market of corporate capital markets. So these are the reasons why infrastructure sector is actually facing huge financial challenges, right? Now for this reason, since infrastructure sector is actually facing huge financial challenges, the government had come up with a dedicated financial institution known as NaBFID, or National Bank for Financing Infrastructure and Development. Okay, it was actually introduced through an act of the parliament in 2021. It is introduced through an act of the parliament in 2021, and government had infused a capital of 20,000 crores. Government allocation is actually 20,000 crores of rupees. Okay, this is the initial capital that was infused by the government. In fact, the target of the government is to enable the NaBFID to provide 1 lakh crores worth of infrastructure loans in the economy over a period of 5 years. You heard me right, 1 lakh crores worth of loans. So you must be wondering, if NaBFID total capital is only 20,000 crores, which was actually given by the government, how can you expect the NaBFID to provide 1 lakh crores of loans? Which means NaBFID should not be dependent on only the government funding. It has to get its own funding from the market sources as well. See, at the end of the day, it is like a bank, it is a financial institution. So the more the diversified sources, the robust the bank is supposed to function. So it has to mobilize the resources from other sources like institutional investors. Institutional investors. What are these institutional investors? You might have heard about the pension funds. You might have heard about sovereign wealth funds, pension funds, and insurance funds. What are these funds? These are long term funds. These are known as institutional funds. They invest in the NaBFID. Why? Generally, pension funds and insurance funds are gathered based on the contributions from subscribers in the pension and insurance schemes. They are generally long term schemes. The fund need not to pay back the money in the short term. So these funds can actually invest in the long term infrastructure projects, but they themselves cannot pick the right project. So instead of directly lending into the infrastructure projects, they can actually invest in the NaBFID, which is taking the business of giving loans to the infrastructure projects. Understand? So NaBFID is expected to get the equity support, raise the capital either through equity or debt market from the institutional investors, either through equity or debt from the institutional investors. So that is another source of mobilization of resources for by the NaBFID for infrastructure creation in Indian economy. Okay. And apart from that, NaBFID is itself a financial company. So why can't it go directly to the capital markets and raise the capital through bond issuance? Isn't it? So bond issuance is also one of the sources of mobilization of resources. That means NaBFID is going to issue the bonds in the market, capital markets, and thereby raise the capital, which is it is going to utilize for the infrastructure creation in the Indian economy. And apart from that, it can also take loans from multilateral institutions. Multilateral lending is also one source. So basically, what is NaBFID doing? NaBFID is doing what the normal banks are not able to do. NaBFID is actually aggregating the resources from multiple sources and maintaining a huge fund so that it can provide loans to the infrastructure sector. See, what is the biggest challenge for the infrastructure financing? Huge capital requirements. The normal banks cannot do it. Normal bank sources are very limited. But NaBFID, being a dedicated financial institution with a proper government backing support, it can actually gather the resources from multiple sources and only for one purpose. Unlike the banks, banks have multiple loan purposes. But in this case, NaBFID has only one purpose, that is to provide loan to only infrastructure sector. Okay, so it is going to meet this problem of huge capital requirements. Okay, so this is about NaBFID. Okay, this is the need for NaBFID. So the first part of the answer has been discussed. Now let's look at the second part. Examine the role of the NaBFID in addressing these challenges. So here we are supposed to discuss the basic functions and their significances. Okay, so let me start with the functions. The first and foremost function of NaBFID is to provide direct loans to the infrastructure projects. That means, remember, it provides direct loans to the infrastructure projects, both greenfield projects or brownfield projects. Okay. So the biggest advantage of this function is it will able to meet the huge capital requirements of infrastructure projects. See, as we have just discussed, it is aggregating the financial resources from multiple sources. So it can afford to provide the loans, huge amount of loans, 20,000 crores, 30,000 crores for each and every project, right? So this is the first significance of this function. And the other function is NaBFID is going to undertake refinancing or takeover loans. What is refinancing? Refinancing means, if at all a bank has given loan to a particular infrastructure project, NaBFID can give the loan to the infrastructure company to pay back the existing loan. That means giving loan to a customer to pay back the existing loan is actually refinancing. Okay. What is takeover loan? Takeover loan is actually a loan given by the bank to another financial institution to take over the loan given to a particular company. In either of the cases, it is going to address a particular important issue, that is asset liability mismatch faced by the banks in infrastructure financing. Let me explain you how it is going to address the asset liability mismatch problem faced by the banks. Let's take a bank. Okay, let's say SBI is there. Okay, SBI has provided loans to a particular infrastructure project. Okay, and the duration of the loan is, let's say, 20 years. Okay, the duration of the loan is, let's say, 20 years, right? But SBI, being a normal bank, cannot wait 20 years to recover the loans, especially when the infrastructure projects are very riskier projects, isn't it? It is going to face the problem of asset liability mismatch because most of the deposits are short term deposits. So it cannot wait wait for 20 years, that too for a huge loan. Then NaBFID comes into the picture. NaBFID is going to take over the loan after 5 years, let's say. after 5 years, NaBFID is going to take over that loan, and NaBFID is going to take care of the loan for the next 15 years. This is what taking over of the loan, right? That means SBI is going to recover its loan within 5 years from the NaBFID, thanks to the takeover loan, right? So this is going to address asset liability mismatch problem faced by banks. So when they don't have to worry about this asset liability mismatch, banks will be encouraged to provide more and more loans to the infrastructure sector, isn't it? They know that NaBFID is going to come and take over this loan after 5 years, so I don't have to wait for the next 20 years to recover this loan. So when that assurance is there, they will be readily going to provide loans to the infrastructure projects. So this is going to address another infrastructure challenge. And apart from that, NaBFID is going to provide credit guarantee facilities to the loans given by the banks to the infrastructure sector. So thereby it is going to de-risk the loans, de-risk the infrastructure loans. See, we have discussed in the previous slide as of why the banks hesitant, or why the banks are hesitant to provide loans to the infrastructure projects, because of the risks, operational risk, legal risks, and market risks. So no bank would want to associate it with kind of risky projects. But here in this case, NaBFID is going to provide credit guarantee facilities to this kind of loans. That means if at all the infrastructure company fails to pay the loan, it is the NaBFID who is going to pay the loan to the bank. So then banks will be encouraged to give loans to the infrastructure projects by de-risking the infrastructure loans. This is one of the significant advantage of NaBFID. Okay, and the other function is development of bond market. See, as we have already discussed in the previous slide, why these infrastructure companies always depend upon the financial institutions to get the loan. Why can't they go to the capital market and raise their loan directly by issuing the bonds in the capital markets? We have discussed there are no takers for these bonds. Why there are no takers for these bonds? Because their credit rating is very poor. Why their credit rating is poor? Because there is a high default risk associated with these kind of infrastructure projects, isn't it? So what the NaBFID is going to do is, NaBFID is going to provide credit guarantee even to the bonds issued by the infrastructure companies. That means if there is any investor who is going to purchase the bond issued by an infrastructure company, and the infrastructure company is going to be defaulted on the repayment, then it is a NaBFID who is going to pay the investor. Then people will be encouraged to purchase the bonds issued by the infrastructure companies. So that will create more liquidity to the bonds. So that will create more demand to the bonds by improving the credit rating of the bonds. So this kind of facility, this kind of guarantee provided by the NaBFID is considered as credit enhancement facility. So whenever you come across this term credit enhancement facility, just read it as credit guarantee facility provided for bonds. Okay, so NaBFID is going to provide credit enhancement facility, thereby improving the credit rating of the bonds issued by the infrastructure companies. If the credit rating is going to be improved, there will be demand for these bonds issued by the infrastructure companies. So they can directly raise the capital from the markets, financial markets, without having to depend upon the regular financial institutions like banks. So development of bond market is also one of the functions and duties of the NaBFID, right? And one more important aspect of NaBFID is its emphasis on the ESG aspects, environmental, social, and governmental aspects behind this infrastructure creation. See, generally, when a bank gives loans to any infrastructure project, it doesn't really care about its negative impact on the society. It is not going to take into account what is the infrastructure, or what is the economic impact, or what is the environmental impact, or what is the social impact of this infrastructure project. In fact, infrastructure projects do really have certain amount of negative consequences on the society. It may lead to displacement of the population, or it may lead to loss of livelihood for a certain population, right? And also it may lead to create deforestation, negative consequences on the ecosystem services. But who is going to take into account of these negative consequences? Nobody. NaBFID is going to consider these ESG aspects as well, environmental, social, and also governance aspects. That means it make sure that there is no corruption angle in the infrastructure project, even if it is a PPP project or public private partnership project. Okay, so how does it do it? It is going to have a proper contract, and it is going to make sure that the project is going to have a minimal impact on the nature or environment. And if there is any inevitable consequences which you cannot control, then the NaBFID is going to compensate this negative impact of the infrastructure creation by providing loans to other sustainable infrastructure projects like renewable energy project or any other green corridor project, green energy corridor project, any kind of sustainable infrastructure project. Okay, so the NaBFID is, by providing a take emphasizing on the ESG angle, it is ensuring sustainable development of infrastructure. Sustainable development of infrastructure. This is very, very important function of NaBFID. See, we are discussing the functions and their respective significances, right? And one more important function of the NaBFID is to play a role, play mechanism of dispute resolution in the implementation of the projects. So we have already discussed about the risks associated with infrastructure projects, especially the PPP projects, public private partnership projects, which requires great deal of coordination between the government and also private entity. There are a lot of instances where there are contractual disputes between the public and private parties. In that sector, in that event, NaBFID is going to provide a service of arbitration by resolving the dispute between the multiple parties involved in the implementation of infrastructure or infrastructure financing. This will lead to smooth implementation of infrastructure projects. If the smooth implementation of infrastructure project is very important to reduce the risk associated with it. See, infrastructure loans are often considered as stressed categories. Infrastructure sector is often considered as stressed category by the banks. That means banks are not going to readily provide loans to the infrastructure sector because of the rough implementation of these projects. But thanks to the NaBFID consultancy service that is being provided in the form of arbitration and also dispute resolution, it will enable the smooth implementation of the project, thereby reducing the risk associated with it and thereby de-risking the infrastructure financing. Okay, so basically NaBFID is going to discharge all these functions, and these are the significances of all these functions, right? So I have given another slide. In this slide I have explained the functions and significance in a tabular format, because this will help you in expressing your arguments in a very efficient manner. Okay, see, look at the question. I'll tell you why do we require a tabular format to answer this question. There is already a first dimension where you have to answer, which is infrastructure financing challenges. Okay, so in the first part of the answer, you are going to talk about the infrastructure financing challenges, and you are going to briefly introduce the NaBFID, and then you are supposed to talk about its function and significance. So the biggest challenge in the answer writing is to complete the answer within stipulated amount of time and stipulated word limit. Okay, so if you have to efficiently convey your arguments within the number of words, within 250 words and within time, then you better take up this tabular format for this question, for this answer. Okay, so try solving this question, try answering this question. It is a very important question, so I would call it a 15 marker question. Okay, so that's it. NaBFID is very, very important for this year exam. Okay, now let's go to the next topic, which is disinvestment. Okay, we are going to this topic is always a important topic. Okay, it is always in news, and this is important, and questions have not been asked on this topic, so that is why I picked up a practice question for you. So this question is important every year. This question can be asked even this year as well. Okay, so let us discuss what is disinvestment and what is the need for disinvestment and what are the challenges in disinvestment process, all these angles through this question. Let's read the question. Disinvestment has led to mixed results for governments in terms of meeting revenue targets. In this context, discuss the need for disinvestment and the reasons behind the slow disinvestment pace in India. Okay. So, first and foremost, what is disinvestment? What is disinvestment? Disinvestment refers to that process of mobilizing the resources by the government by diluting its stake in the public sector enterprises. That means the government is actually selling its assets to a private party from the public sector units, public sector enterprises. Okay, this is one way of mobilizing the resources without having to depend upon the borrowings for its government fiscal expenditure needs. In fact, disinvestment is considered as resources raised through disinvestment is considered as non-debt creating capital receipts. Okay, to reduce the fiscal deficit, it is very important for the government to take up the mobilize the resources through disinvestment. Okay, so this is the introduction of disinvestment. There are multiple kinds of disinvestment. One is strategic disinvestment. That means if the government is actually diluting its stake in a particular enterprise below the 50%, then it is considered as strategic disinvestment. If it is not, it is considered as non-strategic disinvestment. Okay, in the non-strategic disinvestment, government will become government will retain the majority stake, right? Okay. So the second part, discuss the need for disinvestment and reasons behind the slow disinvestment pace in India. Okay, so before getting into the slow disinvestment pace in India, first of all, let's discuss the need for disinvestment. That means, why do you want to sell the family silver? That means, why do you expect the government to sell its public sector units? There must be some strong and compelling reasons behind it. So let's discuss those need for disinvestment. The first and foremost reason is it is a very easier way of mobilizing the resources to meet the fiscal demand or to reduce fiscal burden. As I have already discussed, the resources, the money, the revenues that has been raised by the government through disinvestment is considered as non-debt creating capital receipt. It is very important component of the revenues of the government, receipts of the government. Okay, so if the government want to reduce its budgetary deficit, okay, if government wants to reduce its fiscal deficit, that means if the government wants to reduce its borrowings from the market, it has to depend upon disinvestment. Okay, so this is most important advantage and need behind the disinvestment, right? And disinvestment is going to infuse capital from the private parties, infuse capital from private sector. What is the advantage of rising capital from the private sector, private players? See, one thing, it is not only bring new capital from the private players, but also this capital is going to be associated with new technology. So that means they're going to bring technology, they're going to bring their managerial practices to improve the efficiency of the public sector enterprises, managerial practices. So there will be no unproductive laborers, there will be no inefficient utilization of the raw materials. So apart from the capital, these private players are also going to bring new technology, state of the art technology. They're going to bring managerial practices. Basically, it is going to help the modernization of the public sector enterprises. So this will help in modernizing the public sector and improving the efficiency of the public sector enterprises. So that is another advantage, and that is why, see, public sector units are actually considered as inefficient for multiple reasons, because there is too much of political interference in it, and there is strong trade union also, and also the public sector units do not have profit maximization orientation. That means public sector units main motto is to achieve a particular economic objective in the society, in the economy, in the society. So due to lack of this profit maximization orientation, they tend to become inefficient, right? So that is one of the reasons why most of the public sector units like BSNL, Indian Railways, or till recently Air India, all these public sector units have become loss ventures. Okay, so next, the disinvestment is very important for efficient allocation of resources. Efficient allocation of resources. Now, what is it? What is it? What is this efficient allocation of resources, and how disinvestment is going to improve the efficiency of allocation of resources in the economy? See, I have just explained that public sector enterprises tend to become inefficient for multiple reasons. Okay, and when a particular company becomes inefficient, it is going to consume lot of raw materials. It is going to consume lot of natural resources, right? For example, I'll give you an example. Let's say there are two fertilizer companies. Okay, there are two fertilizer companies. One fertilizer company is owned by government, and other fertilizer company is actually a private company. Both these companies are actually dependent on natural gases to produce the fertilizer like urea. Okay, they are producing ammonia based fertilizers like urea, both of them. But where do you get the natural gas? Natural gas is actually a very scarce natural resource in India. We have to depend on imports for natural gas. But this private sector, this public fertilizer company uses more amount of natural resources to produce less amount of fertilizer, whereas the private company can actually produce more amount of fertilizers with less amount of natural gas. So this private company is more efficient compared to public company. The problem is not with respect to this company alone. The problem is actually that it's not that this company will be in losses. The problem is that since it is a public sector company, the government will make sure that it gets the required amount of natural resources and inputs for its functioning. So that natural resources which are actually imported into the Indian economy is going to be feed into inefficient firms like public sector enterprises, which otherwise would have been efficiently utilized by the private sector enterprises, private companies very efficiently, which will help in reducing our imports of these scarce natural resources, isn't it? So due to the inefficiency of the public sector enterprises, the natural resources are being inefficiently allocated to them. I'll give you another example. Let's take two power companies, two power companies like NTPC, thermal power companies. One is actually a government company, and another is actually private thermal power plant. Okay, the government company is utilizing more amount of coal to produce the same amount of electricity that is being produced by the private company. That means the private company is able to produce more electricity with less amount of coal. But coal is actually a scarce resource in India. Even though we have good amount of coal resources, our mining capacity is very limited. That is why we often depend upon the imports from countries like Indonesia and Australia for coal. So such an important resource which is being imported is being inefficiently utilized by the public sector unit, which otherwise would have been properly utilized by any private company. So inefficient utilization of resources. What kind of resources? Natural resources, and not only natural resources but also financial resources. Most of the public sector units are actually sick industries, but still government is going to provide budgetary support year by year. Why? Because they are politically sensitive. Government cannot turn a blind eye on these government companies, public sector units, because there are lot of labor force which depend upon these public sector enterprises. I'll give you an example. See, it is very interesting to know this. Last year in 2024, government has infused around 1650 crores in a public sector unit known as RINL, Rashtriya Ispat Nigam Limited, which is actually a steel plant located in the Visakhapatnam. Okay, and when government infused 12, government allocated 1600 crores from the budget, and the same year government asked to prepare a report on the sustainability of this company, because the company has been a loss making company since a decade, and government is actively thinking of disinvestmenting or privatizing this company. Okay, in 2024 this was the situation. The government would want to divest its stake from the Visakhapatnam steel plant, and it asked the SBI to prepare a report on it, sustainability report. Then cut to 2025. That means after elections, things have changed. The same government had announced 11,000 crores for the same steel plant as a revival package. So basically we are throwing good money after bad money. That means government is actually diverting the most scarce important financial resources for sick industries. Don't you think it is actually going to widen the fiscal deficit due to the pumping the money into sick PSUs? So this is what, when I said inefficient utilization of natural resources and also financial resources, not just natural resources but also financial resources. When government is going to divest its stake and attract the private players, then government responsibility is not going to be there on with respect to allocation of resources to that company. As long as it is a private public company, only till then government has a responsibility of providing the resources. If it is not a public company anymore, it can stand by its own self. It doesn't have to divert the scarce natural and financial resources to inefficient PSUs. So these are the reasons, these are the advantages of disinvestment. These are the compelling reasons behind the process of disinvestment in Indian economy. Okay. So that is why every year the government would specify a particular target. That means this year the government is actually, union government is going to raise this amount of money from disinvestment. But unfortunately, in the last decade, that means only 2 years, in the last decade, only 2 years, that means in the financial year 2018 and 2019, the government could able to meet its disinvestment target. In fact, in the rest of the years, it failed to meet the targets. In the rest of the years, it failed to meet the targets. That means 8 of 10 times the government is failing to meet its disinvestment targets. In fact, in the last 8 years, that means from 2016, in the last 8 years, the government actually listed 36 PSUs for selling, but only 10 were sold to the private parties. Out of 36 public sector units, only 10 were sold. Something must be wrong. That is why the government is actually unable to dilute its stake from the public sector units. The government is unable to sell its assets in the public sector units. What must be the reason? That is the last part of the answer. The reasons behind slow disinvestment pace in India. Okay, so let's discuss the reasons as well. Reasons for slow disinvestment pace in India. First and foremost challenge is the valuation challenge. Valuation challenges. What do you mean by valuation challenge? See, when government wants to dilute its stake in a public sector enterprise, it has to provide a proper value to the shares. That means if a government is selling 20% of the shares to a private investor, it has to provide a certain value to the private investor. But the problem is there are no private players who are going to purchase the shares issued by the government or diluted by the government at the value fixed by the government. Why? Because most of the PSUs are actually sick PSUs. This valuation is a problematic thing because the public sector units are very sick and ailing. Because of the sick industries, there is no demand for the shares diluted by the government. Okay. And also there is one more reason why private players are not ready to purchase at the value that is fixed by the government. Why? Because private players are they're very much sure about the government intention. Why? Government would want to desperately sell its stakes from the PSUs because it has a specific target in the budget. In the budget, it has specifically mentioned that this year we are going to raise 60,000 crores through disinvestment. That means it has to sell it in the market. There is no other way. So they know that government is desperate. When you know that the seller is actually desperate, the purchaser, the buyer is going to take advantage of it. Okay. So that is why the private players do not want to quote a high price to the shares. Private players are not ready to purchase the shares at a value that is being offered by the government. So this is known as fire sales. That means distress sale by the government. Distress sale by the government. When the government is selling its family silver, there must be some desperation behind it. So why can't we take advantage of it? That is the reason why private players would want to wait till the government is going to bend to its knees. That is the reason why behind the slow pace of disinvestment process in India. It is very unfortunate, but this is true. Okay. And also there is one more reason why private investors would not want to get into uh, purchasing of this shares issued by the government. Okay. Because there are, as I have already discussed, there are two kinds of disinvestments. One is strategic disinvestment and other is non-strategic disinvestment. Strategic disinvestment is actually very much encouraging for private investors because government is actually going to dilute its stake below 50%. That means the firm is not going to be a public sector unit anymore. That means the firm is going to be privatized. Then the government interference is no more going to decide the fate of the public sector unit, that particular enterprise. So private players or private investors are very happy in investing this strategic disinvestment. But whereas in the non-strategic disinvestment, private players are not going to come because it is still going to be a public sector unit, and government intervention or government interference, political interference is going to be there, and it is going to be inefficient down the line. So this is also one of the reasons. That means majorities control or stake held by the government in most of the PSUs. That is why they don't want to, private investors do not want to come and do business with the government. Okay. Next. Okay. The other reason is whenever the government plans for disinvestment or privatize any public sector unit, the first resistance comes from the laborers or the employment unions. Very, very rigid. Take the case of BSNL, Air India, or any what you call any steel plant, this Vishakhapatnam steel plant that we are talking about. And down the line, even if the government want to disinvest the railways, even there also we are going to face stiff resistance from the labor unions. So resistance from employees. See, this is going to be a very, very politically sensitive issue. See, whenever there are elections, government doesn't want to touch the public sector units. Whenever there are state elections, government doesn't want to touch the public sector unit located in that particular state because it is a politically sensitive issue. They don't want to antagonize the voter base. So this political considerations, resistance from employees and political considerations. So the government is going to defer its targets of disinvestment. Government is going to postpone its plans of privatizing certain public sector units. That's what happened in the RINL, the Vishakhapatnam steel plants case. Okay. So this is also one of the reasons why the disinvestment process is very slow in India. Okay. And one more interesting aspect is with respect to delay is that, see, once the government is going to dilute its stake from a public sector unit, what is it going to do with that money? That is important. That is going to decide whether private investors would want to come and purchase the shares or not. That is going to determine whether the private investors are going to invest in the public sector unit or not. See, for example, there are two ways of it. Once the government is going to dilute its stake, the money can be paid to the public sector, thereby expanding the capacity of the public sector unit so that it can actually expect more amount of private investment. That is one way of doing it. Or else the government dilutes its stake, and whatever the revenue that may be generated because of the disinvestment can be utilized for any other purpose, for any other scheme, for any other revenue expenditure by the government, not for investing in the public sector unit. Then that is a problem. See, the private investors know for a fact that government is actually selling its asset not to improve the performance of the public sector unit, not to improve the capacity and not to improve the efficiency of the public sector unit. The real angle is, and the real motive is to mobilize the resources to reduce the fiscal burden. So this is the real motive. When the private investor is aware of the real motive, they don't want to come and invest in a ailing industry. They want to come and invest in a particular that industry where the government has a salience focus on improving its performance and efficiency by utilizing the money only for the investment in the infrastructure, investing in the public sector unit itself. So utilization of lack of utilization of resources of disinvestment on development of PSUs. When the government itself is not ready to invest in it, why do you think private investor is going to come and participate? Okay, so this is also one of the reasons for the lukewarm response from the private players. Okay, and also regulatory hurdles. This is very, very important. Regulatory hurdles. That means if the government wants to dilute its stake and privatize a public sector unit, then it has to seek multiple approvals from multiple departments. Ministry of Finance department and other ministry, the government clearance is not just enough. Sometimes there are certain public sector units which are located in different states, and sometimes the respective state government would have granted some free land for the development of this public sector unit. The state government might have given some sort of support, infrastructural support to this public sector unit. So when the government want to dilutes its stake, it has to seek the approval of the particular state government as well. It cannot do it alone. So it requires a lot of great level of coordination between state government and central government. So it requires state approvals from the multiple departments from the state governments as well. So this is going to create too much of delay in the process of disinvestment. And also risk aversion by bureaucrats is also one of the reasons. Why risk aversion from the bureaucrats? There is a risk aversion from the bureaucrats because see, whenever the government fixes a particular price for the disinvestment and there are no private players who are ready to purchase at that price, what is the natural corollary? That means obviously the next step should be to reduce the price. If there is no market demand for your shares, you have to reduce the value of your shares. Till then nobody is going to come and purchase your shares, nobody is going to come and invest in your public sector enterprises. But despite that, the government and the bureaucrats and the ministers who are responsible for this process do not want to take that chance, because if at all, if there is any particular bureaucrat who is responsible for selling this public sector unit shares at a low price, then he will have to explain this to the public down the line. Somebody might file a PL in the court saying that the government has sold the public sector units at a very cheaper cost. Then the Supreme Court is going to going to establish an inquiry commission on this. Why would anybody would want to go through this? Nobody would want to go through this entire problems, hassles, and that is why they show a tendency of risk aversion. That means if there are no participants there are no private players who are ready to purchase the public sector units, then they leave it there. They are not going to go a step further by offering at a cheaper price, because they don't want to take any risk of answering to the public and Supreme Courts in the court down the line. So this is also one of the reasons for the poor and delayed disinvestment process in India. And other political opposition because of the social welfare considerations as well. What is this? What are the social welfare considerations? Take the case of BSNL. Though BSNL has been a loss-making venture since many years, its success cannot be seen only through its financial performance. We have to find out its social significance. That means it has provided digital connectivity to the rural areas, isn't it? The same thing goes for the railways. Railway cannot survive without budgetary support from the government, even for its revenue expenditure, operational expenditure. But despite that, railways are providing affordable mass transport facilities to a large chunk of the population. That is the social angle behind it. So take any kind of public sector unit, it has a social obligation behind it. So the performance of a public sector unit should not be judged purely solely based on its commercial angle and financial performance, isn't it? So that is why most of the political parties are not very much encouraged or encouraged enough to undertake this disinvestment process due to these social welfare considerations. So there is naturally there is opposition from the political circles. So this is also, these considerations are also often acts as barriers and impediments to the process of disinvestment in India. Okay, so these are different reasons, various reasons for the slow disinvestment process in India. So I'm sure you can answer this question, easy question, a 10 marker question. It contains 2 dimensions. You just have to mention 3 advantages and 4 to 5 reasons for slow pace of development. Okay, simple question, easy question. I request you to answer this question, very important. Okay, the next topic is very important topic. You can expect a question on in mains this year, asset monetization. There has never been a question in the last 3 to 4 years on this topic. It has been almost 4 years since this asset monetization concept has been come into existence in Indian economy. Government has actively introduced national monetization pipeline in 2021 itself, but still there has never been a question on this. Since this topic is important not only because of its static importance, but also see, the government is actually thinking of launching a second phase of this scheme, asset monetization scheme. So in this context, it is very important. Okay, so first and foremost, what is asset monetization? Okay, so let's understand this asset monetization and what is asset monetization and what is the impact of national monetization plan and what are the challenges, implementation challenges through this question. Read this question. Explain the concept of asset monetization and discuss how the national monetization pipeline can help India's infrastructure growth. What are the main challenges in executing this plan? Very important question. Since there has never been a question on this topic in the previous year papers, I have made a practice question for this. Okay, now first and foremost, what is asset monetization? Okay. Asset monetization is actually a process of raising the revenues by the government. It is actually a very smart way of raising the revenues by the government to meet its infrastructure spending needs. Okay, it is a very smart way. That means, see, asset monetization does not involve selling of the assets like disinvestment. So we know we have, while we are actually dissecting the mobilization of resources topics into multiple subtopics, I have mentioned 2 important topics under government sector. One is disinvestment and other is asset monetization. Okay, disinvestment and asset monetization are the 2 important non-debt creating capital receipts for the government, right? However, asset monetization is different from disinvestment. In disinvestment, government is actually diluting its stake. That means government is selling its assets. But in asset monetization, government is not going to sell its asset. It is going to give lease. It is going to mobilize the resources based on the existing infrastructure assets. I'll explain that. First of all, let me define asset monetization. Asset monetization refers to that process of raising the resources by the government or its entities by unlocking the economic value of its existing infrastructure assets which are either underutilized or unutilized. So in the asset monetization, the government is actually raising the resources by unlocking the economic value, unlocking the economic values of its public assets. What are the public assets? Infrastructure assets. How does it going to do? How does it do? It is going to do it by giving the infrastructure asset to a private entity. That means giving the infrastructure asset to a private entity through a lease agreement. See, here it is not selling the asset, it is actually leasing this asset to a private entity. That is how the government is going to raise the resources. Okay, I'll explain this through an example. You will better understand this. Okay, okay. This is the example. Let's take an infrastructure project. Okay, let's take a highway project. This highway project was actually constructed by National Highway Authority of India. That means it is a public owned infrastructure asset. That means it is a government owned infrastructure asset. NHAI is actually a government entity. This is a government owned infrastructure asset. It has been completed. Okay, so this is actually a brownfield asset. That means the asset has been completed. Okay, and it is also operating, and NHA is actually collecting revenues from the commuters. NHA is actually collecting the tolls. Okay, it's properly owned by the government, operated and maintained, and toll is collected by the government. Okay, fine. Now, fair and good. Now, National Highway Authority of India wants to construct a new highway project. Okay, but it doesn't have the required money. Okay, then NHA actually can give this highway project to a private entity on lease. On lease for, let's say, some 20 years or something. Okay. During this period of lease, the private entity is going to be responsible for operating the highway, maintaining the highway, and also toll collection. It is going to collect the toll. That means it is going to generate the revenue out of the highway project. So it is going to take the infrastructure project, completed project, which is already generating revenues. That project is acquired by a private entity for a particular time period, and this private entity is going to pay upfront payment. It is going to make an upfront payment to the NHA. And what is NHA is going to do with that money? It is going to invest in a new infrastructure project or greenfield infrastructure, new infrastructure creation. That means a new highway project is going to be started by that money, isn't it? This is a classical example of asset monetization. This is a win-win situation. This model is known as TOT model. That means toll, operate, transfer model of public-private partnership. Okay, that means here this is a win-win situation for both of them, both the government and the private entity. Why it is advantageous to the private entity? The private entity is actually not involved in the project during its construction phase. The whole project has been completed and it has become operational. It has been more than 2 or 3 years since it has started its operations, and it is also generating stable revenue flows. That means there is low risk with respect to the project, because the project has already been completed, and it is also generating stable revenue flows. So only existing completed infrastructure assets which are generating stable revenue flows, they are going to be monetized by the government. They are given to a private entity in the form of lease for a specific period and receive upfront payment for it, and that private entity is going to take over the operation and maintenance and toll collection responsibilities and rights for the next 20 years, and after 20 years this asset is supposed to be given back to National Highway Authority of India. It's a win-win situation for both the public and private property. The private investor doesn't have to worry about the risks associated with all the infrastructure project, because the private entity is actually coming into the picture only after the completion of the project, right? And other advantage for the government is actually government is not selling any asset here. Government is not at all selling the asset. Government is only giving it in the form of lease. So that is what this is an example of asset monetization, and this same exercise can be replicated in other sectors as well. Already government has started doing it. BSNL is actually earning by leasing its unutilized towers to private telecom companies. BSNL has lot of underutilized assets. That means lot of telecom towers, and these telecom towers can be given as lease to private companies like Jio or Airtel, and it is getting bulk payment. Okay, And also same thing, Airport Authority of India is actually it is seeking to monetize the land surrounded by the airports. And airports also can be given as lease to a private company. So there are certain airports, 6 airports were given to the Adani company, Adani infrastructure companies, for operational and maintenance and also development. And Airport Authority of India received bulk payment, and this money is going to be introduced or invested in other infrastructure creation, new airports. Same thing, Power Grid. Power Grid has leased its transmission network to a private company and received the money, and it has utilized that money to construct new transmission infrastructure. So what is happening here? Let's see. First and foremost, an existing infrastructure asset is being monetized by the government, isn't it? Once it is monetized, the proceeds received from the monetization is used to create a new infrastructure. Once that new infrastructure is created, it is going to add to the existing asset base. Even that new infrastructure project is going to be further monetized to receive the money, so that can be utilized to make a new infrastructure project. So this is how, through asset monetization, government is actually planning to expand the infrastructure base of the economy. It can do it without having to sell its assets. It is a very smart way of mobilizing the resources. So that is what asset monetization is all about. That is the concept of asset monetization. So by utilizing this concept of asset monetization, government would want to create create infrastructure base in the economy, and for that purpose government has come up with a program known as National Monetization Pipeline in 2021. National Monetization Pipeline. Okay. National Monetization Pipeline. Under this pipeline, the idea of the government is to generate revenues of 6 lakh crores. Generate revenues of 6 lakh crores of money, so that it can be utilized for further infrastructure creation. So the target is 6 lakh crores. Okay. The responsibility was given to the Niti Aayog, and Niti Aayog is mandated with the responsibility of picking the right asset for this asset monetization. Okay, right asset for this asset monetization. Okay, well and good. Now that you understand what is asset monetization and what is the basic objective of National Monetization Pipeline. Okay, now the question is, discuss how National Monetization Pipeline can help India's infrastructure growth. So let's discuss the advantages of National Monetization Pipeline. This is very, very important. Okay, the first and foremost advantage is it is going to make the government mobilize the resources without having to sell its assets. So mobilization of resources for infrastructure, mobilization of resources for infrastructure without selling the assets, without selling its assets. It is a very smart way of mobilizing the resources. So any money that is generated through asset monetization is supposed to be spent only on new infrastructure project and nothing else. Okay. And the other advantage is that you are actually attracting private investment into this. Okay. You are attracting private players into the operation and maintenance. See, what are we doing in this case? The government is actually has this infrastructure asset was given to private entity for operating, maintaining and toll collection, right? This is going to improve the operational efficiency of these infrastructure projects. Operational efficiency, it improves operational efficiency. So you must be wondering, how is it going to improve the operational efficiency of infra projects? See, for example, let's say a highway project has been given to a private entity for a lease of 20 years. Now it is the responsibility of the private company to operate it and maintain it for 20 years. Okay. It may come up with new technology to improve the seamless traffic on the highways. For example, it may come up with a new technology to reduce the time of toll payment at the toll gate. So if the time of toll payment at the toll gate is actually reduced, it is going to reduce the time of transportation of the goods and the goods along the roads, isn't it? Is it not going to improve the operational efficiency of the maintenance, operational efficiency of the highways? The same thing goes for airport. The same thing goes for ports as well. Let's say in the seaports, let's say if the port is leased to a private entity, the private player may come up with multiple, the private player come up with better technology to handle the cargo better. That means automatic handling cargo, automatic cargo handling technology might be introduced. This will actually reduce the time of loading and unloading at the port. If the time of loading and unloading at the port is going to be reduced, it will reduce the turnaround time at the shipping ports, major ports in India. Is it not improving of operational efficiency? So the government is not spending money, but it is only giving the infrastructure asset to a private party for its operation and maintaining, and thereby rise the revenues by its own. Then private party, to improve its revenues, it will come up with better infrastructure, better technology, and better managerial practices. This will improve the operational efficiency of the infrastructure projects in India. Okay. And not only that, it is going to give a huge push to the national infrastructure pipeline. What is national infrastructure pipeline? National infrastructure pipeline, under this, the government objective is to generate 111 lakh worth of investment in 111 lakh crores 111 lakh crores worth of investment in the infrastructure sectors. Where do you get that investment from? Asset monetization, right? So it give boost to national infrastructure pipeline. National infrastructure pipeline. Okay, these are some of the advantages of national monetization pipeline. Okay, some of the advantages of national monetization of pipeline. Fine, this is good, but are there any challenges with its execution? Yes, there are certain challenges with its execution. That is, so let's discuss the challenges in executing national monetization pipeline one by one. Okay, that is the second part of the answer. The first challenge is valuation challenges. So we have already discussed this point in disinvestment topic. Okay, just like how government would face challenges with respect to the valuation of its assets, the same way, even in the case of leasing the infrastructure assets to a private entity, it would face similar challenges of valuation. Okay, that is one aspect. And second, there is certain contractual and risk sharing disputes between public and private parties. See, for example, let's say in the previous example that I've discussed, the highway has been given to a private entity under TOT model. That means toll operate transfer model. That means the entire highway has been already constructed by the NHA, National Highway Authority of India, and it has given to a private entity through lease. But after, the private entity might have already paid bulk payment to the National Highway Authority of India, and the risk is actually with the private entity to recover that money in the next 20 years. Let's say, what if there is no demand for transportation on that road for the next 20 years? What if if it fails to recover the money? See, the market risk is actually not with the private investor. Market risk is actually due to the lack of economy growth, lack of proper aggregate demand in the economy, and all these reasons. So the risk should be properly, optimally shared between both the parties, because it is not the mistake of the private investor, now that it's the mistake of anybody. So the government should actually share the risk to a certain extent. Often these risk sharing agreements would often subjected to multiple level of disputes. Time and again in the public private partnership projects, the private player and the public player would always go at loggerheads with each other. This happened in the Delhi airport issue, Delhi airport and Delhi metro expressway issue. It also happened with the expressway, Delhi to Allahabad expressway. So in all these cases, we tend to have this contractual and risk sharing disputes. This, due to this fear of disputes, this may discourage private buyers from asset monetization. It may discourage private players from asset monetization. That means to participate in the asset monetization. Okay, this is also one of the challenge, and this challenge in fact may crowd out the private investment in greenfield projects. This is a very important issue, important challenge. See, what are we doing here? Here the government is constructing the project. During the process of construction phase, during the phase of the construction, the private player is actually not coming. Private player is actually not investing. Private player is coming only at the time of, after the completion, after it became operational and after it became revenue successful for a few years, then the private investor is actually coming and acquiring the project. So there is no risk for private investor. So this will eventually result in crowding out of the private investment from the greenfield infrastructure projects. Every investor would want to purchase only the brownfield infrastructure assets. They don't want to purchase the greenfield assets anymore. They don't want to involve in the infrastructure stage itself. So this is going to be a problem, because the entire infrastructure construction responsibility will squarely falls on government alone, without any private presence. Every private player would want to acquire the project when it is going to be leased. Okay, this is going to be a problem. This is going to be a burden on government investment in greenfield projects. That means the private investment is going to be heavily concentrated on brownfield projects, and this leads to concentration of private investment in brownfield projects. This is going to be the problem. Okay, and just imagine, all the infrastructure projects are going to be constructed by the government companies, but they are operated and maintained and collected, toll is collected, revenue is collected by private entities. That means down the line all the infrastructure projects are going to be in the hands of private parties. Then what is the guarantee that these private parties are not going to hamper the user fees? So this increasing private participation may actually hamper the interests of users. That means they may increase the toll charges, they may increase the user fees, because they are going to take the control of operational maintenance. All the projects will be under the control of private parties. Government will not have any say then. So this is also one of the challenge here. See, infrastructure creation is ultimately supposed to benefit the end use consumer. If it is not going to be if it is not going to benefit the end use consumer, what is the point of making the infrastructure projects? Isn't it? It should be affordable to all the sections of the population, right? Next, limited investor interest in non-lucrative assets. This is a very significant issue. See, let's take certain sectors like roads, or let's take coal mines. In these sectors you tend to have good private participation. That means if a highway is constructed and if the NHI wants to lease the highway, anybody would want to jump into that project and acquire the constructed highway. But it is not the same thing with other sectors like railways or power, or civil aviation sectors. Look at these sectors. In these sectors they could actually not meet the targets. Railways could actually meet only 30% of the asset monetization target. In fact, civil aviation could only meet only 14% of the asset monetization target. Okay, so this is the problem. This is the problem. The railways and civil aviation, they could not meet their targets. Why? Because railway projects are actually not lucrative. Let's say the government is actually thinking of leasing the railway stations under the private authority, so that they are going to maintain it and collect the revenues, so that the government is going to get the money upfront payment so that it can utilize it for infrastructure creation in the railway sector. But the problem is nobody is there. There are no takers for this project. Nobody wants to take over the railway stations because its revenue potential is very poor. So the problem is this national monetization pipeline is going to be successful only for certain infrastructure sectors, but not all. Okay. So that is another challenge. And insufficient funding. This is an insufficient funding because national monetization pipeline, its goal is to mobilize 6 lakh crores of rupees. 6 lakh crores of rupees for the through this asset monetization. Okay. Now, why do you want to use that money? That money is supposed to be utilized for infrastructure creation. But what is the goal of national infrastructure pipeline? The goal of national infrastructure pipeline is to provide around 111 lakh crores of rupees of infrastructure investment. But whereas under national monetization pipeline, it is only providing 6 lakh crores. Then how is it going to be sufficient for the infrastructure dreams of India? It is actually hardly meeting 5 to 6% of the NAP demand. NMP is only going to meet only 5 to 6% of the demand of the national infrastructure pipeline. So that is actually a challenge, right? So these are the challenges in executing national monetization pipeline. Okay. So with this, you can answer this question easily. So you understood what is asset monetization? Please explain the definition and give an example. Okay. And introduce national monetization pipeline and its objective, and who is responsible for this implementation of this national monetization pipeline. It is Niti Aayog, which is mandated with the responsibility of picking the right asset for monetization. And what are the advantages of asset monetization, and what are the challenges involved with respect to executing the national monetization pipeline. That's it. Okay. So that's it with the discussion, and I expect you to write down answers for all the 3 questions. Okay. If you have any doubts, please ask you can mention in the comment section. I'm going to reach out to you. So I hope you enjoyed the discussion. In the next video, I'm going to cover more number of mains topics through question and answer. Okay. Till then, see you guys. Thank you very much.